They took control of this business. They launched a competitive payment platform, and then you had 20 of the biggest banks basically saying, hey, we're going to all use this solution. Zelle has way more volume than Venmo has. Zelle has 50 plus partner banks now using Zelle and integrating them into their different products. Basically, banks say, hey, we have a competitive solution to Venmo and PayPal. Banks have actually done a very good job of embracing platforms. We've seen two really good examples. One is Zelle. And I want to give a little bit of the backstory on Zelle. We published a post maybe in 2018, really going deep into where did Zelle come from. Zelle is the payment platform competitor to Venmo. Zelle has way more volume than Venmo has. Zelle has 50 plus partner banks now using Zelle and integrating them into their different products. And it basically lets you make peer-to-peer payments for free, seamlessly and easily, like Venmo, owned by PayPal. Now, how did Zelle come into fruition? Well, we did a deep dive on this in 2018, where we really spoke about it was really a handful of some of the biggest bank CEOs that got together. I asked Brian Moynihan, CEO of Bank of America, about it. And it was basically a conversation with a few of the big bank CEOs. You had about 20 bank CEOs that were initially in on basically a joint venture to go and buy a company called Early Warning Services. And Early Warning Services and Clear Exchange were basically combined in 2015. Historically, Early Warning Services still offers fraud detection, risk management, and authentication services to banks. So this was kind of like a intermediary service. All the banks were already using this banking solution anyway, already in their businesses. And then they decided to also now spin out the functionality that they had around providing payments and remittances into a peer-to-peer payment platform product solution called Zelle, right? So they basically all pooled their money together. They took control of this business. They launched a competitive payment platform called Zelle. And then you had 20 of the biggest banks basically saying, hey, we're going to all use this solution. Then you had now another 30 plus banks have piled on and also use the solution. And this is just a way to join forces and adopt the same tool, spread the cost of this functionality across all the banks, build enterprise value if you were one of the early shareholders in the business. But you have a separate tech team, tech business entity focused specifically on this platform model. And now it'll be interesting to see how well Zelle can try to monetize the payment platform. We've seen Venmo, for example, say, hey, if you want to have this money in your bank account instantly, we will take 10 basis points and cap it out at a fee of $10. Or you can wait the standard 1 to 3 days for this money to appear in your bank account. It'll be interesting to see how much flexibility Zelle has to actually try and monetize and build a business model beyond what they have today. I think that's where some of the friction and bureaucracy that comes from a massive JV structure that Zelle has will show signs of in terms of the long-term trajectory for the business. But just taking the business at face value as a payment platform that basically banks say, hey, well, now we have a competitive solution to Venmo and PayPal. Yeah, this is a win. This served that purpose. We will see if Venmo is able to kind of out-innovate on the business model side over the long term, but certainly in a few-year period of time, getting a business to scale in less than 5 years in a kind of cooperative JV approach, this is a great example. Hi, this is Alex from Winner Take All. Thanks for joining us. Hope you enjoyed the content. Feel free to leave a comment, ask us questions, and definitely make sure to join us on our next live stream.